on inflation. So there is another RBI report which came up last month that says that the CASA ratios are declining, which means people are not investing in bank products like FDs, etc. But they are going more towards equity-based investments like mutual funds, direct stocks, etc. So how will that impact the banks and the people again?
It is already it totally depend on the percentage of the interest that bank is giving to the people. If bank increase the same amount, so if you take a personal loan, it will have you with the 13 or 14%, okay, and you are giving the same percentage interest to 4 to 5% to the end user, the money that you are using from that particular user, and you are earning 10-15% over the when the markup change. So if you reduce that markup, then the people will invest in bank, and the bank will go on a higher side. So in just a and conclusion, and the bank has to reduce their profit margins.
Correct.
That's it.
That will affect a
That
lot
will
of
affect.
yeah. And because people are also now realizing, getting educated on how they're beating inflation with investing in better instruments than FD, right? Your thoughts?
So
Compared to.
if we compare the return, na, you will see that mutual fund returns are in a year they give between somewhere between 15 to 25% return. If you talk about the leading banks in India, if the return in an year will be somewhere between 3 to 6%. That will be 6% on the maximum side, and 3% average is 4 or 5% only.
Post-tax.
Yeah. So if I have 10 lakh rupees, why would I choose to invest in a bank? Rather, I will choose invest in mutual funds or even stocks. Yeah.
Because I think they choose because they think they're very risky, and banks are stable. That's what they think, but they're not able to beat inflation. But more people are now coming into.
So the inflation rate in India, if I'm not wrong, it is 6%.
Correct.
The interest that banks are providing is between 4 to 5%, and the mutual funds, the returns that they are providing, even the SIPs and the stock market return. If we see any good share, even the mutual funds, they also invest in banks only. Na, they build a portfolio of 10 to 25 good banks, and they invest in that. But they even if you see the return of the ICICI Bank or Axis Bank during the last 2 to 3 years, you can see it was in 2021. It was somewhere the stock was at around 800 or 700 price. Currently, it is at 1100. So it has increased from 800 to 1100. It will be a rise of 30 or 20% or 25% in just 2 years.
It's just banks. So you're saying instead of investing money in the FDs, invest in their shares.
Invest in the shares.
Yeah, that's a good idea that you've given.
People have a set amount of salary that they get, right? So you either put it in your bank or you put it in the stock market. So if you don't put it in the bank, it goes into the stock market. So obviously the banking from a CASA perspective, it will obviously reduce. But from a different, like say, but people will put more money into the stock. The stocks will grow. So you see people have seen, and everybody mostly has come into stock market post the COVID, when Nifty was at 7-8 thousand, and now it's almost 3 times. Right? So people have seen phenomenal returns. So they don't know the down trend. So people think that people money in the stock market is going to grow, right? And that is the notion. That's why people are putting more into the system of stock and stocks. The more it's a cycle, right? You put more money in stocks, stocks grow. Then you put more money into stocks, the stocks grow. So until and unless there is no bear cycle coming in, I think this will be the same way it will go. And that's, I mean, it's also beating, and there's a lot of education in the market which says that inflation beating instruments are stocks, and Nifty has given return 15% over a period of time. So which the FD hasn't.